Hey guys, this is Nick from Financially Aware, and in this video I want to talk about the 3 ways you can buy gold and silver and which one I think is going to outperform in the future. So before we get started, hit that like button for the YouTube algorithm, and let's talk about the first way to buy gold and silver. That's the obvious and usually the best way, especially if you're holding it long term, is physical gold and silver. And the reason why that's the best way is because there are no paper intermediaries like buying an ETF or a gold mining stock or something like that. You actually hold it in your hand and you own it. There's no fees, there's no storage fees as long as you keep it, by yourself in your own house or a safe deposit box or something along those lines. So the best way to buy that is usually either through your local coin dealer or online, places like Kitco and APMEX. And like I said in a previous video, don't go crazy with all the weird commemorative coins and all these Star Trek this and Mount Rushmore coins or something like that. Stick to the most liquid, most common, most recognized coins and bars. And for gold, that's, if you're in the US, American Eagle gold coins, Canadian gold maple leafs, and gold Krugerrands, and then 1 ounce bars like Pamp Suisse or something like that. For silver, similar. The American Eagle silver, American Eagle silver, Canadian maple silver, same thing. And the bars, those are the most liquid. They have the lowest, well, they don't all have the lowest premium, but you'll get the most money back for them when you sell it. So something like American Eagle gold coin has a high premium, but when you sell it, you might get above spot price for it because of that, because they're so popular. So stick with the very common liquid stuff and don't go for the obscure stuff, and know your premiums. Don't pay too much for gold or silver. A few months ago, when all this stuff was happening, all this craziness, silver premiums were at 100%, gold premiums were at 10%. I made a video telling people not to buy that, just to hold cash, because at that point it doesn't make sense to buy silver premium for 100% when it has to go up 100% just for you to break even. Okay, so you could like gold as silver, but just be smart about it. Don't buy when everybody wants to buy. Buy when nobody wants it. And you can't always do that, but if you're going to be stacking it, buy a little at a time or whatever, and just hold on to it. The number 2 way to buy it is the GLD and the SLV ETFs, and that is kind of a proxy for gold and silver, and they're supposed to represent, gold is supposed to represent 1/10 of the actual ounce, even though it doesn't represent it completely because of, over the years, the fees and the storage fees eat into that. So you see the GLD is like 169 or something like that, whereas gold is like $1,800 an ounce. So there's a $100 an ounce difference really there in that price. Similar with silver as well. But if you're buying them for short term as like a trading vehicle because you think in the next few months gold is going to go up a lot or silver is going to go up a lot, it makes more sense to buy those if you're just going to buy a whole bunch and trade it and then be out of it with a click of a button. That's fine, then do that instead of trying to buy the physical and then have to worry about selling it and losing that premium on the buy side and on the sell side. So number 2 is GLD and SLV. You can just buy those with the click of the button. A lot of people say that, when the thing hits the fan, they may not have the gold and silver in there backing it or whatever. I don't recommend these for long-term, just buy and forget. But if you're going to buy them for, like I said, 6 months, a year, 2 years even, or something like that, that's okay. And so another way to buy it, and what a lot of people, when they try to get fancy, they go for the gold miners. So the big gold miners and the junior gold miners, so that would be the GDX ETF and the GDXJ ETF. Now, for those, the thing is that GDX ETF, if you look at a 10-year performance for that, it's like, minus 2.8% or something. It's basically flat over 10 years, the gold miners ETF. And the junior ETF is down like 5% per year over the 10-year period. Whereas both of these are up like 40% or so during the last 1 year period. So these things are kind of, people see them as kind of a leveraged way to play gold or silver. And again, they're like the GLD and SLV ETFs, they're not really for long-term holding, because long-term, if the price stagnates of gold or silver, a lot of these guys, they can't operate, or they're losing money or something like that. So long-term, they're not good holds, but for a short period when things are picking up, inflation's picking up, the debt is skyrocketing like we have now, and that could bring a lot of inflation and really just skyrocket the price of gold and silver. The miners are a good way to play it. So for the gold, GDX, for the gold miner junior miners, GDXJ, and there's equivalent silver miner ETFs as well. That's SIL and SILJ. And for SIL, it only consists of about 8% of US miners, whereas Canadian miners are like 52% of that. And again, the 10-year return on SIL ETF is like 0, whereas the 1-year return is like 40%, similar to SILJ, where only like 22% of it consists of US mining companies, and another 62% is Canadian. And the 8-year, because it hasn't been around 10 years, return is minus 5.8% a year. Okay, so if you held it for 8 years, you're down like 50% or so, something like that. But the 1-year return is 40%. So again, these are good ways to play kind of an accelerated way to play gold and silver if you think they're going to spike up quickly, like has been happening in the last year or so. If you look at silver, it's, I remember not that long ago it was $13, gold was $1,200, and now, gold is making 8-year highs now, something like that. The last high, all-time high, was 2011, when it briefly spiked to over 1900. And I remember that because I was in Brazil and I was looking at an internet cafe and I saw the news, but it didn't last long. And same thing with silver, it spiked to $50, but that was very brief. And so it came down very quickly. And so out of the gold and the silver, which one do I think is going to have the better return? It's definitely the silver. And like I said, I'm not an advisor, so this is just for educational purposes. But in my opinion, silver always does better at the tail end of the hysteria for gold and silver. And that happened in 2011. It happened in 1980 as well. So I'm expecting it's going to happen again. And just a little history on gold and silver. The ratio of gold to silver in the earth is like 17 times more silver than gold. So common sense is that the gold to silver ratio should be about 17 and a half, 20, something like that. Historically, it's been about 16 or so, but there have been spikes up and down, and right now we spiked up to above 100 for the gold silver ratio. During 2011, 2012, that ratio went down a lot. It went to like in the 30s or something, or even lower, something along those lines. So when things take off, when the gold and silver takes off, people, it's just like stocks. When expensive stocks start going high, the smaller buyers, they look for cheaper stocks that are going to take them along for the ride as well, and that's what happens with silver. And so there's a famous saying that gold is the money of kings, silver is the money of gentlemen, barter is the money of peasants, and debt is the money of slaves. So, pay attention to that, because that works. So when gold starts going up, silver is going to go up with it, and it's going to overtake it percentage-wise, not dollar-wise. But if gold goes up 30%, silver could go up 100% very easily. So if you're going to play, precious metals because you think inflation's coming and it's going to be happening in the next year or so, or that, gold is going to keep going up, silver is going to lag. But when it finally, gets its legs, and people, when you hear everybody on YouTube and Reddit and everything, when they stop talking about buying Hertz and Tesla and whatever, and they start talking about precious metals, then the end is near for the precious metal run, and look to be selling your silver. But in the meantime, silver probably has a lot more room to run, I think. One thing to notice is that, you ever heard the saying, a broken clock is right twice a day? Be careful of these guys that are always sending out newsletters and articles and stuff that are always saying hyperinflation is right around the corner and all this stuff, because those guys are usually sellers of gold and silver, so they're always saying that. So they might be right now. I think they probably are right, but these are the same guys that have been saying that 2 years ago, 4 years ago, 6 years ago, whatever. They're always saying that because they sell that stuff. So don't put too much weight on what these people are saying when they have something to sell you. Do your own research, but keep in mind that when you start seeing everybody talking about buying gold and silver and stuff, that's usually the time that you want to probably lighten up on some of that. So that's my talk on gold and silver and which one you should buy and how to buy them. If you like this video, give me a thumbs up. Leave me a comment. Let me know if you think gold is going to outperform in the next year, or if silver is going to outperform, and if you think it's better to buy the physical or something like an ETF like the GLD or SLV, or if you think miners are the way to go. And as always, if you haven't subscribed, please subscribe to my channel so you don't miss any of my future videos. Thank you for watching.